more. What might it mean for rate cut expectations? Joining us to discuss this morning here at Post 9, Allianz Chief Economic Advisor, former PIMCO CEO Mohamed El-Erian is with us ahead of the Egyptian game. It's good to see him. Thanks for making the time.
Thanks for having me.
We've talked about this. You do not see a cut or a hike for the remainder of the year. Yes?
That's correct.
And what's the reason? What's the calculus behind that?
First, I think the worst of inflation is behind us. I think we're going to have the peak of this cycle either the June data or July. And what's left driving inflation comes mainly from the AI, and that has a positive supply side coming with it, as opposed to what we've left behind, which is oil and tariffs, which had a negative supply side aspect. So the Fed can live with that. Why not cut too early? Just wait and see how it evolves. And I think the economy is in a good place right now, and just let it run.
You do think that the market is not fully understanding the change that Warsh is about to bring?
So there's three big changes that I don't think the market quite internalized. One is from the Powell era Fed to the Warsh Fed. This is a reform-oriented Fed. We saw this with forward guidance. The reform is proving contagious. I don't know, last week we had Sarah Eisen having a panel, and next thing we know, Lagarde comes out and says, I don't believe in forward guidance anymore, I like framework guidance. So his breath of fresh air into the Fed is actually being embraced by other central banks. And I don't think the market quite realizes it's not about rate expectation now, it's something much bigger. It's about the 5 areas he's identified, and it's about modernizing the Fed. The second change is from the era of efficiency to one of economic statecraft, and then of course we have the massive technological change, which, as you know, I'm really enthusiastic about.
Do you think that the guidance shift is a positive for the markets? One thing that they pointed out on the panel last week in Sintra was that, ever since they kind of announced that this change would be happening, they haven't really seen much in the way of rates volatility or any consternation in the markets.
And I think that's critical, Leslie. There may be some increase in volatility, but we had to break this really dangerous codependency that had evolved between the markets and the central banks. Chris Waller had a great speech yesterday in which he shows when it becomes a problem. And he cites 2020, 2021 as when it became a problem. And at the end of the day, the markets didn't really benefit from 2022. That was an awful year for whatever asset you were in, because this codependency had gotten us to a bad place. So I think over the long term, it's good for markets. There may be some volatility as the market gets used to less forward guidance.
Yeah, it's still a little soon to tell. In the meantime, you have a new essay in the New York Times titled "The Besant Doctrine: The Days of America Being Played Are Over." And you highlight a recent speech that the Treasury Secretary gave at the Economic Club of New York. You supportive?
Yeah, I think what I like about this is he made very clear that what's happening now is not haphazard, that there's a doctrine that underpins it. He sets out the 5 conditions. I don't think people quite understand that this is a fundamental change. This is no longer about just efficiency, open markets. This is about what's called geoeconomics, meaning that economic outcome and corporate outcome will be determined more and more by geopolitics, domestic politics, and national security, and not just by commercial consideration. We've seen this shift happen. We've weaponized tariffs. We've weaponized the payment system. We're seeing industrial policy much more aggressive. And this will continue, and people need to think differently about what's ahead.
You're not making a judgment call on whether this is a step away from free markets and whether that's good or bad?
So I think that free markets on their own need some sort of correction. We saw with globalization, for example, we didn't take into account the distributional effects. And then you got an apple. I also think we're in a different era. When he set it out, and he rightly said, the U.S. had been played for a long time, particularly by China. China was allowed into the system, and China had certain obligation that it didn't live up to. So it took advantage of globalization, but didn't live up to its responsibility. And I think that if you're going to be part of globalization, you have got to live up to your responsibility. It's this notion of managed globalization light. You still have globalization, but it's managed so that people don't take advantage of it.